Hey everybody, welcome back. Well, we can see the doji. We know the FOMC did absolutely nothing, and there's some key choice words from the Fed today. But I think really what we should focus on is earnings. I do want to just show that the ES and the futures, you do have a doji here, which means we have signs of uncertainty, and that makes our life super, super easy. I'll show you why. Quick reminder, 27.5% of you do not subscribe to this channel. Please click subscribe and all notifications because these come out at different times and you want to be notified because they are all connected together. Let's get to it. Now, the most important thing that we have here with this doji is a clear demarcation line. And the important thing about these demarcation lines, from my standpoint, is, well, you can just see that 63.66 is very clear, right? We know exactly where we're at. All right, then we come here and we have that 64.35. So we have that range. Now let's just take a look at what transpired today because I do want to get this out so that you guys are ready for earnings. And we can see here we are at the lows, here we are at the highs. And why did this happen? This is all earnings. This is all itchy. And this is all earnings. And really, today, he made it very clear. I'm going to be very clear about this with JPal. I'm not going to spend a lot of time on it. I'll get into it on Saturday. It was very clear that he is blaming tariffs for why he's not cutting rates. I mean, he all said it just outright, blatantly, and was very emphatic about it. And it is what it is. And you can't really blame him when we're in situations where you're talking about things like this, where we're literally watching places like Brazil saying, oh, well, we might be having a 50% tariff. Oh, no, we just got a phone call. We might be able to work it out. Like, it's absolutely insane. And you're seeing these names that are in Brazil, for example, and 1 minute they're falling apart. This is their largest plane builder. And 1 minute they're falling apart. And then the next minute they're ripping. This kind of instability, it does lead to inflation. I mean, it just does because you're not able, I'll explain why. You're not able to produce the goods at the same rate because you don't know what the cost of the goods are going to be. So even if you're dealing with this and you have these fluctuations, you still don't know how many X, Y, or Z, whatever your product is, to produce because you're not really sure what the tariff's going to be. You don't really know what your gross margins are. It makes it incredibly difficult to commit and deploy capital from a business. It's just a fact. It's not a side on this. It just is. And so today he made this argument, and I think and I'm not a fan. Everybody that watches this channel knows that in regards to itchy. With JPal, I'm just not. But he made a very clear argument about it, and I see his point on it. And some people are going to hate that, but whatever. And then you can just kind of see at the end of the day, the last 10 minutes, they started buying. Pardon my voice. It's been a long one today. And then we just saw these absolute monster breakouts. And we're going to go through these breakouts line by line, what's actually happened here, and then one that's not really tied to these. But there's 4 names that we really need to go over. And we need to go over the data and the earnings, and we're going to do that all combined. And then we're going to look at some charts. Now, to start with, this is just a clip from a research piece from Goldman. Actually, this is from Goldman. And what they're showing is they're showing the positioning going into earnings on where institutions are playing. And they were leaning more towards Microsoft. It's 9 out of 10, 8.5 out of 10, Microsoft Meta. And what's important about this is the mid-30s Azure growth for Microsoft's robust top line, performance in the quarter, guidance supporting growing spending trend for Meta. Meaning on the Meta side, show me that it's worth the money that you're spending, and they sure hit that number. If you're in the community, you've already seen this information. This particular piece we reviewed before the market, before earnings. And then we just have the guides on where they were at, so we know what they're doing when they come out. So second quarter revenue guide, everybody wanted to see above 45.5. The guide was 42.5 to 45.5, so they want that top end number to come out. And then the guide, they were looking for 47, 48. Just remember this versus the street at 46. It's important to know what you're looking for so you know when it comes out. And this is different than when you guys are looking at like earnings whisper and things like that, because this is also showing you where the buy side is, like what the institutions that are going to buy are thinking. So if you ever beat these numbers, you know that those pops off the open, meaning on earnings, you know that they're mostly going to hold as long as they're hitting those guidance numbers. Expect OPEX to be reiterated 114, 119 in post-Google's earnings. CapEx will be nudged up likely towards the high end, 64.72. Meta raised CapEx from 60 to 72, raised last quarter. And then you have Microsoft. So we're looking for that 35, 36 on the Azure. I'm speaking fast because I'm trying to cover it all, guys. Upside risk to both consensus for CapEx. So there was upside risk to both consensus of CapEx and prior at CapEx. The company published an employee letter yesterday addressing recent layoffs. There was no hedging around ongoing AI investments, both people and office infrastructure. We're going to talk about where the tech space is actually weak tonight as well. But let's get into this with Microsoft. Now, what happened here? Microsoft reported fourth quarter revenue of $76.44, and it's really hard to see this up here, isn't it? And I'm not really doing it any favors, am I, by what I'm doing here? So let's trash all that. Let's try this in. I'm not going to have time to edit this, so it is what it is. This is what we got. That's all we can do, what we have. That's it. That's all we can. So here we go. 76. I don't know. It's making it really difficult. All right. So let's do it this way. You're just going to have to deal with oh boy. You're just going to have to deal with my issues here. And we'll just do it so you can see where I'm at. Right up here. Revenue of $76.44, up 17% year over year. Beat the estimate by $73.80 billion, blah, 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 blah. So they crushed. Fourth quarter, $365. They were looking for $337. So it's just an outright, crush. But here's the important thing about these numbers. They break it down by reporting segment. So you have the productivity and business center right here, which is 16%. Billion, 26 year over year. Intelligent cloud. Personal computing's taking it on the chin, in my opinion. But the really important thing here is the intelligent cloud segment, revenue from Azure and other cloud services is up 39%. Well, once you saw that, you knew you were going to run. Why? Because we were looking for the high end to be that 34, 35%. Overall cloud revenue was 46.7, 27% year over year. The company full fiscal year, 15%. Cloud and AI are the driving force in business transformations across industry. CEO, we're innovating, yada, yada, yada. Azure surpassed $75 billion milestone fiscal. We'll get into what these stocks did in a second, but you already saw Microsoft. And Meta beat second quarter estimates, strong guidance, shares surged to new highs. Now, with him spending all this money to hire people, obviously he's going to expect results coming forward. But here you are at 47.5, 44.5. You remember the numbers we went over earlier, but here you are, you're looking for 5.79. You came in at 7.14. You crushed. Revenue was up 22%. And you just got to take a second. Love them or hate these guys, but I mean, this is incredible. Like, you're a multi-trillion-dollar company. And look at this. Look at these numbers. Like, it's just insane, the level of growth and leverage that they're getting from here. It's not even going away. Like, look at the margins are 43%, up from 38%. So not only are they making more revenue, not only are earnings going up, but the margins per dollar are going up. It's just really incredible. CapEx expenditures included principal payments on financial leases. Meta noted headcount was up 7%, kind of the opposite of what's happening at Microsoft, which is interesting. Cash flow, 25 versus 8, 47 in cash equivalent. Strong quarter. Meta expects third quarter revenue to be 47.5 to 50 versus the estimate of 45. So they took their estimates up by 5%. Meta expects full year 2025 to be in the range of 14 to 118. Company anticipates CapEx expenditures of 66 to 72. So they're not really taking it up. Now, Microsoft is going to give their guidance on their call, which was not out at the time of recording this. I think it would be helpful for us to go through the things that are out there that are super important. And what do I mean by that? Like, what's important? What's going on in AI is one thing. What's going on with mobile is something completely different. ARM shares are trading lower tonight. We're going to show some of these charts. But look at the guide. Even the guide's way off. And you can see that right here. It sees 29 to 37 versus 35. So they're telling you it's going lower. See sales 101 to 111. They're giving you a range, but really what they're saying is, hey, we're establishing that low end. It's not great. And then the EPS comes in line and the sales miss on the rev side. Well, if you're missing on this quarter, how are you going to beat this quarter? You're not. So you're guiding lower. And the stock responded to that guide very clearly. So it's very important to get that. And it's very important to understand that. And we will spend more time this weekend on Saturday's video getting into what happened with the Fed. But this is really the actionable stuff for you guys. Because when you see earnings and start looking at things like Qualcomm and sees the gap earnings, and you're looking at these numbers, and here you are, 223 to 243 versus the 242 estimate. This was the easiest short in the world. I put it out there the minute I read it. Because you can't guide lower and tell me that you should be trading at 80 times earnings. 275, 295 versus 282. So I don't mind paying for premium for something, but if you're not going to be a premium, I'm not going to pay that, right? You don't go into Walmart and think you're in Neiman Marcus, right? So just understand that when you look at this stuff. And I really think you have to think about this. Like, why are we having a hard time here? Like, why is Qualcomm having a hard time? And Apple's actually down on this. And it kind of makes a little sense, but it does tell you that Apple Apple could have some problems tomorrow. Now, a couple things to take away. Number one, the moment that this came out and you saw it, you could just see the absolute explosion. And then you had basically a minute to make some decisions. And then you can see we got all the way up to this 772 level. And then you can see where the VWAP is from that peak level. The other thing that might be helpful if some people actually shorted this stuff is you drop a peak VWAP as well after hours and you just watch how that acts. The other thing that we do a lot of is and then we go to the breakout and then we drop fibs. And what this does for you is it'll show you the ranges after hours. And you might think that it doesn't matter. It does, because you can utilize these ranges and see, are you holding, are you not holding? Like, for example, you're holding that 78.6, which ties you right into these fibs. So you really have this range that you're trading after hour between 753.32 and 759. And until you pop through that peak VWAP or you pop below it, you really don't have a trade. There's really nothing to do. So for the people that are either in the community or that you guys did it on your own after hours, know this, right? So that's not something that you would look at. But if we cleaned all that off, and you guys can screenshot that and use it for tomorrow if you want, but I'll go over it tomorrow again, pre-market public for you guys. If you want, just comment below and I'll have it ready. But if you look at some of this stuff, like you're at blue skies. And so what we want to do, and I got to apologize to the guy who told me to use the weak magnet. I actually you can go over here and use a weak magnet or a strong magnet. I'm using the weak magnet. I'm not going to lie. I'm digging the weak magnet. But you're in this area, and I really think you have to just pay attention to, like, these would be those key levels, but really look at that peak VWAP. That's the thing you want to watch after hours more than. Like if you have a conference call going on, and this is usually when someone's explaining everything and, Zuck's like, oh, we're all gonna wear goggles and it's gonna be cool. It's gonna be so much different than the metaverse where I was trying to turn you all into giraffes. No, this is gonna be the cool thing, haha. And then it goes, yay, goggles. And then the CFO explains how they're gonna pay for the goggles, right? So just always use a peak VWAP. It's usually very helpful and helping you understand what's gonna happen. And I find great value in it, and you should do what you're comfortable with. But let's take a look at Microsoft for a second. And I think you're going to see a little bit different of a story here with Microsoft because you're already starting to trade up a little bit into this. And if we just drop this maybe to a 5 and get a longer time frame, you'll see the little peaking its head out of the range. That would be a new close after about an hour of just kind of going sideways. Not the worst thing in the world. But with Microsoft, you have to be careful because that CFO's deadly. She comes out and says something and it's like wham. It's a problem. I've been there. It's not fun. I've had fun before. It's not like that. So you want to watch how this thing trades, but these would be the levels and you are over that peak VWAP there. And so that is obviously a very different story for you guys after hours. Almost a tale of two tapes after hours right there, right? But they definitely want to be in Microsoft on the peak valuation basis versus Meta. And that's pretty clear. And it makes a lot of sense when you look at the cloud. But you are seeing this all follow over where Oracle's up, CapEx going up is going to obviously drive up NVIDIA, and some poor souls would rather buy AMD. There's no accounting for taste, but there it is. AMD's up as well. So you're seeing those drivers. AVGO finally got over that 3 handle, and I would expect with the CapEx numbers this to push. Now, the other side of this is, if you look at Apple's down, and it makes a lot of sense. And I actually think Apple gets a lot worse. The bar for tomorrow is so low, but candidly, he's losing his AI team to Meta, and all you have to do is just pick one. It doesn't even matter which one you pick. I hate to say it like that, but no matter what you use, Perplexity or Anthropic, whatever you decide to go with, pick one and set up a strategy because this is just absolutely insane. You have people just leaving. I think 4 people left their AI team in the past 30 days. And why wouldn't they? Like, if you don't have a game plan, why wouldn't they? So you have Apple tomorrow and Amazon. And I think the Amazon being up 6 makes a lot of sense because of the cloud coming from Microsoft. And for me, looking at this, it does make a ton of sense to me that Microsoft, if you looked at last quarter's earnings, they absolutely crushed. And so it probably will continue to be the leader. Because not only is it growing, it's gaining market share. They're the ones you want to play. It's very similar to what Oracle's doing, right? We're doing more, if you could tell tonight, on the fundamental leg of the stool than the technical leg. And I think that's very important because when you look after hours, it's the fundamentals that are driving this. I did have a short in this disclosure at the time of recording this portion. I do not have the short any longer, but you can't guide lower. right? You don't go to Walmart and pay high prices. You pay low prices. So again, you're not going to trade at 80 times earnings or 70 times earnings, whatever it is, but this thing's got issues. You want to make sure you hold the 148 and then you follow that with ARM, and you can just see I put the VWAPs on there and how they're acting. And you'll see where they're at and how they're acting. You can't miss it. This is super tactical and short term tonight. I'll get more into the long term on Saturday. That's why I say to subscribe and click all notifications, because this is really important so that you're prepped for tomorrow when you come in. Even if you watch this later and you understand why things are doing what they're doing. And this is kind of stuff we go over in the community all the time. But if you're trying to get in, make sure you're on the wait list. There's a group, I think they have 3 days left that are in this batch. And then once you're on the wait list, you'll get an invitation if you want. If you don't, that's fine too. Do what you're comfortable with. So we look at ARM and we look at how this is acting. Do we think we're going to break out, or do we think we're going to wind up trading down? I think you're going to wind up trading down. And I want to just leave you with this. The NASDAQ is setting up to hit all-time highs tomorrow. CapEx is expanding. Companies are crushing earnings. And we're sitting here worried about what the Treasury is going to do. Are they going to cut rates or raise rates? There's no way he's cutting rates in this environment. There's no way. And we'll get into it. And he's not cutting in September. It dropped like off a stone. The real problem is the dollar's getting a lot stronger. And with the dollar getting stronger the way that it's getting, it's very difficult to think that you're going to be in the industrial names any longer, right? They're going to start rolling over because of how well they were doing because of the weaker dollar. So you're going to see rotation. I don't know how much rotation you're going to see in tech. I just think you're going to see people buy tech because of this. So if you look at XLK, for example, and that whole space, that's where I think this is going, because the tech earnings are just going to be there either way because of the growth. See, the biggest problem with the CapEx spending that everyone complained about was you didn't have any growth. They weren't growing their earnings with all this CapEx. And now they're growing their earnings. So as long as they're growing their earnings, they're going to spend CapEx, which means they're going to buy NVIDIA. And some people are going to go out there and buy second tier AMD. It's just the way that they are. Not everybody's perfect. So you just got to realize that. But I think the important thing about this is CapEx is here to stay. One final one, or we can do two more. And I just want to throw this out there. This is where everybody said, oh, it's definitely going lower because Hindenburg said it's going to crack and it's going to be an egg and it's going to be this and that. You're at 387 tonight on an earnings report that really wasn't even that great on the front here, but the revenues were through the roof, but the margins were off. So just keep this stuff in mind. The other one that I want you guys to be aware of, I don't think Hood was that bad. I just think it moved a lot, but it wasn't that great, but it just moved a lot. And I think that that's what you're dealing with. Remember, you could have bought this for $30 in April when everybody thought the sky's falling. Now everybody wants to own it, right? And that's why you always want to do your own homework. That is it.